Welcome to Chartist Masterclass. In this video, we're going to be talking about Bollinger Bands, a popular technical indicator used by traders all over the world. Bollinger Bands were created by John Bollinger, a technical analyst who has been actively trading and studying financial markets for over 4 decades. In the 1980s, Bollinger developed the Bollinger Bands indicator as a way to measure market volatility and identify potential breakouts. In this video, we'll be covering everything you need to know about Bollinger Bands, including how they work, how to interpret them, and how to use them in your trading. By the end of this video, you should have a solid understanding of how to use Bollinger Bands to improve your trading. What are Bollinger Bands? So, what exactly are Bollinger Bands? Bollinger Bands are a technical indicator that consists of a simple moving average, an upper band, and a lower band. These bands are plotted on a chart and form a channel around the price action. The simple moving average is typically set to a 20-period length, which means that it averages the closing price over the past 20 periods. The upper band is then plotted 2 standard deviations above the moving average, and the lower band is plotted 2 standard deviations below the moving average. The default settings for Bollinger Bands are a 20-period moving average and a standard deviation of 2. However, these settings can be adjusted to fit the trader's specific needs or the characteristics of the market they are trading. Bollinger Bands are used to measure volatility in the market. When the price action is contained within the bands, it indicates lower volatility. When the price action breaks out of the bands, it can signal a potential trend change or increased volatility. Traders can use Bollinger Bands to identify potential breakouts and trade setups. For example, if the price action is contained within the bands and then breaks out of the upper band, it could be a sign to buy. On the other hand, if the price action breaks out of the lower band, it could be a sign to sell. Overall, Bollinger Bands are a useful tool for identifying potential trend changes and trading opportunities in the market. How to interpret Bollinger Bands. Now that we know what Bollinger Bands are and how they work, let's talk about how to interpret them. To read Bollinger Bands on a chart, you'll need to look at the position of the price action relative to the bands. If the price action is contained within the bands, it indicates lower volatility and a sideways trend. If the price action is touching or breaking through the upper band, it could indicate an uptrend. If the price action is touching or breaking through the lower band, it could indicate a downtrend. In addition to identifying the trend, Bollinger Bands can also be used to identify overbought and oversold conditions. When the price action is consistently touching or breaking through the upper band, it could be a sign that the market is overbought and a potential sell-off is coming. On the other hand, if the price action is consistently touching or breaking through the lower band, it could be a sign that the market is oversold and a potential bounce is coming. Traders can also use Bollinger Bands in conjunction with other technical indicators for confirmation of trade signals. For example, if a trader sees a potential breakout on the chart and Bollinger Bands confirm the breakout, it could be a stronger signal to enter the trade. Bollinger Bands can also be used as a volatility-based stop-loss. When the market is more volatile, the bands will widen, and the trader can set their stop-loss at a level further away from the current price. When the market is less volatile, the bands will narrow, and the trader can set their stop-loss at a level closer to the current price. In summary, Bollinger Bands are a versatile technical indicator that can be used for a variety of purposes in your trading.
Hey there Chartist Masterclass traders, thank you for joining us and making it this far into the video. We hope you're finding the information useful and that it's helping you to make better trading decisions. If you're enjoying the video, please show your support by trading the like button and subscribing to our channel. Your support helps us to create more content like this and provide valuable insights and analysis to traders like you. So please, take a moment to hit the like button and subscribe to our channel. Thank you, we really do appreciate your support. Now, let's get back to the video.
Trading strategies using Bollinger Bands. Now that we've covered the basics of Bollinger Bands, let's talk about some common trading strategies that use this technical indicator. One strategy that uses Bollinger Bands is the Bollinger Band squeeze. This occurs when the bands narrow significantly, indicating a period of low volatility. This is often followed by a period of high volatility, as the market tends to revert to its mean. Traders can use the Bollinger Band squeeze as a signal to prepare for a potential breakout or trend change. Another strategy that uses Bollinger Bands is the Bollinger Bands bounce. This involves buying when the price touches the lower band and selling when it touches the upper band. This strategy takes advantage of the tendency for the price to bounce off the bands and return to the moving average. A third strategy that uses Bollinger Bands is the Bollinger Bands breakout. This involves buying or selling when the price breaks out of the Bollinger Bands. For example, if the price action is contained within the bands and then breaks out of the upper band, it could be a sign to buy. On the other hand, if the price action breaks out of the lower band, it could be a sign to sell. These are just a few examples of trading strategies that use Bollinger Bands. As with any technical indicator, it's important to test out different strategies and see what works best for you and your trading style. Conclusion. In conclusion, Bollinger Bands are a popular technical indicator used by traders to measure volatility and identify potential breakouts and trend changes. They consist of a simple moving average, an upper band, and a lower band, and can be adjusted to fit the trader's specific needs or the characteristics of the market they are trading. To interpret Bollinger Bands, you'll need to look at the position of the price action relative to the bands. You can use Bollinger Bands to identify the trend, overbought and oversold conditions, and confirm trade signals. You can also use Bollinger Bands as a volatility-based stop loss. There are several trading strategies that use Bollinger Bands, including the Bollinger Band Squeeze, Bollinger Bands Bounce, and Bollinger Bands Breakout. It's important to experiment with different settings and strategies to see what works best for you and your trading style. If you're interested in learning more about Bollinger Bands, there are many books available on the topic, and we've listed some of them in the description below. We encourage you to give Bollinger Bands a try in your own trading and see how they can improve your results. Thanks for watching. If you like this video, please give it a thumbs up and consider subscribing to our channel for more content like this.